While most people are distracted by stock charts, crypto memes, and breaking news alerts, something extremely serious is happening quietly behind closed doors at the highest levels of the global financial system. Central banks around the world are aggressively accumulating gold at a pace we have not seen in decades, and they are doing it with urgency. This is not a routine portfolio adjustment. This is not a normal reserve rebalance. This is an emergency move, and almost nobody in the mainstream media is explaining what it really means. If you think gold is boring or irrelevant in a modern digital economy, stay with me, because by the end of this video, you may see the entire financial system very differently. Before we go any further, if you care about understanding what central banks are doing before the public finds out, make sure you like this video and subscribe to the channel. Here on Vault Stress Report, we break down financial stress signals early, without hype, without noise, so you can see what's coming before it hits the headlines. Subscribing now helps you stay ahead of the crowd. Now let's talk about what's really happening. Central banks are not emotional investors. They don't chase trends and they don't buy assets because of headlines or fear-driven social media posts. When central banks move, they move slowly, deliberately, and with long-term survival in mind. That's why their sudden acceleration in gold accumulation is such a powerful signal. Over the past few years, and especially recently, central banks have been buying gold at record levels, not small amounts, massive strategic quantities, and the pace is increasing, not slowing down. This is important because gold serves one primary function for central banks. It is the ultimate form of financial insurance. Gold has no counterparty risk. It does not depend on another country's promise. It cannot be printed, frozen, sanctioned, or digitally erased. When trust in the system starts to weaken, gold becomes the final anchor. And right now, central banks are acting like that trust is under serious pressure. Think about what central banks know that the average investor does not. They see liquidity flows in real time. They see stress inside bond markets before it becomes visible. They see debt levels, currency risks, and geopolitical fractures long before those risks are priced into markets. When they move into gold aggressively, it suggests they are preparing for instability, not growth. One of the biggest drivers behind this emergency accumulation is the growing concern around fiat currency credibility. Government debt levels across major economies are exploding. Interest expenses alone are becoming unmanageable. Printing money has become the default solution, and central banks understand better than anyone that excessive currency creation eventually destroys purchasing power. Gold, on the other hand, has survived every monetary system collapse in history. That's not opinion, that's fact. Another critical factor is geopolitics. The global financial system is fragmenting. Countries are actively reducing dependence on the US dollar for trade and reserves. Sanctions have shown governments that dollar-based assets can be weaponized. Once that realization sets in, gold becomes the neutral reserve of choice. It doesn't belong to any country. It doesn't answer to any political system. It simply exists as value. What makes this situation even more alarming is how quietly it's happening. Central banks are not issuing press releases saying, "We are preparing for crisis." They never do. They accumulate gold silently, steadily, and only after the fact do the numbers show up in reports. By the time the public notices, the buying is often already done. And here's where things get even more interesting. While central banks are stacking physical gold, paper gold markets continue to operate as if supply is endless. Futures contracts, ETFs, and unallocated gold claims far exceed the amount of real metal available. This creates a dangerous imbalance. If confidence breaks and physical delivery suddenly matters, prices can move violently. Central banks understand this risk, which is why they are securing physical metal, not paper promises. Ask yourself this question. If the financial system was strong, stable, and secure, would central banks be rushing into gold at record levels? Or would they be reducing exposure to an asset that pays no yield? Their actions tell the real story, not official statements. This also explains why retail investors often get caught off guard. By the time fear reaches the public, institutions have already positioned themselves. Gold rallies don't start with headlines. They start with quiet accumulation. What we're seeing now fits that pattern perfectly. Another overlooked element is trust between central banks themselves. Gold is one of the few assets universally accepted in international settlements without reliance on another nation's banking system. In a world where alliances are shifting and tensions are rising, gold becomes the ultimate settlement asset. That alone explains the urgency. Now let's be very clear about one thing. This does not mean tomorrow the system collapses. Central banks think in decades, not days. But emergency accumulation signals preparation, not optimism. It signals that they see rising probabilities of currency instability, financial stress, or geopolitical disruption. This is why understanding these signals early matters. On Vault Stress Report, we focus on stress points, not price predictions. When central banks move like this, it's a stress signal, not a trading tip. It tells you how fragile the system really is beneath the surface. As this trend continues, the disconnect between perception and reality will grow. Markets may look calm, stocks may rally, but beneath that surface, the foundation is being reinforced with gold. That alone should make you pause. If you've made it this far, you're already thinking differently than most people watching financial news today, and this is where engagement really matters. Drop a comment below and tell me this. Do you think central banks are preparing for inflation, currency resets, or something even bigger? I read the comments, and your perspective helps shape future videos. As we move forward, watch what central banks do, not what they say. Watch gold flows, not price charts alone. Watch physical accumulation, not paper promises. History shows us that when gold quietly moves into vaults, change is coming. If you found value in this breakdown, share this video with someone who still thinks gold doesn't matter anymore. These conversations need to happen before the next shock, not after it. And if you haven't subscribed yet, now is the time. Vault Stress Report exists to help you see the warning signs early, clearly, and without noise. Because when central banks prepare in silence, it's usually the world that ends up hearing the noise later.